Good morning, everybody. We have an amazing show for you today. We have Tom Lee dropping some massive bombshells about what's going to happen in 2024. We have Jerome Powell talking to 60 Minutes. We have Jensen Huang from NVIDIA talking about crazy things that get me excited about NVIDIA even more. And we have some updates from China. Things are not good. And Turkey, things are even worse. But first of all, today's Daily MVP, sponsored by Stock MVP, your research tool for the stock market, a tool for retail investors, built by retail investors like me. Check it out. Now, let's talk about Daily MVP today, Mr. Tom Lee. So Tom Lee, the only guy, with the exception of a few people I know that have fully predicted what happened in 2023, the only guy that remained bullish on the market when everybody, including myself, were bearish, is now talking about the market in 2024, and he has a lot to say. You absolutely have to listen to what this guy said. Check it out.
I think 2024 is revealing the stock market is getting stronger. Because it is proving to be extremely resilient. You know, last week Tesla missed, fell 11%. The S&P was up for the week. This week we had two big fangs miss and disappoint, and the market's, of course, roaring as we end the week. It's a 14th consecutive week. I think it has a lot to do with, one, the economy's incredibly resilient. The Fed, I think, has turned dovish. We don't know the timing of the first cut. Inflation, I think, is falling basically like a rock. And we know there's a lot of cash on the sidelines because there's over $6 trillion sitting in money markets. And yet the S&P, you know, is just in the last 6 weeks generated more return than an entire year of owning money market cash.
Yeah, it's been unbelievable. So March doesn't matter? I mean, is that the lesson of this week?
Yes, I think... Well, I think the bond market really cares whether it's May or March. I think that the stock market really should just care that the Fed has gone from fighting inflation and almost giving the economy a heart attack to one where they're trying to manage the business cycle. So if they don't feel comfortable doing this cut in March and instead of May, I don't think it should have any effect on equities and how they do today.
So it's important not to get caught with the minutia and focus on what's important here. Now, Tom Lee is saying something here that is insanely valuable, which is that the stock market has gone through a change. It's no longer fragile. It's no longer kind of this bipolar. It's a lot more able to sustain a certain level of calm. Now, he's talking about adversity. He's talking about some bad earnings, some disappointments, but the market has not budged. The market is still very, very strong. Now, he's talking about why that's happening. And as always, any good building has good foundations. And he's saying, look, the economy is so strong right now. You know, the employment numbers are great. The GDP numbers are great. Inflation is dropping like a rock. And these foundations allow for the stock market to absorb, to have a chin, to absorb a lot of these hits and to stay strong. And that's not going away in 2024. So he's talking about a Fed that's being more dovish in 2024, which is 100% true, although in the second half of the year for sure. And he's talking about a lot of cash being pent up. A lot of cash is on the sideline because people are still not sure about what to do in this market. And once they get convinced, it's go time. It's going to flood the market and cause another bullish wave. And I think he might be right because inflation drives the bus. And right now, inflation is coming down. The apartments, the houses, the real estate market, all of this will come down because nobody's going to move until the summer months. And while interest rates are still high, at some point the Fed will start lowering those rates, pushing more transaction activity at cheaper prices in the market, driving the real estate price down, driving inflationary prices down. Gasoline will continue to come down. Obviously, it's a seasonal thing, right? Gasoline gets more expensive in the summer months, not in February, not in March, not in April. So as gasoline and shelter kind of eases, then inflation will ease, and then the rest of the market will do fine. So I think Tom Lee has a very, very solid theory here. But now let's talk about the guy who actually gets to call the shots, which is Jerome Powell. So Jerome Powell went on 60 Minutes and he said this.
Inflation has come down really over the past year and fairly sharply over the past 6 months. We're making good progress. The job is not done, and we're very much committed to making sure that we fully restore price stability. We have a strong economy. Growth is going on at a solid pace. The labor market is strong, 3.7% unemployment. With the economy strong like that, we feel like we can approach the question of when to begin to reduce interest rates carefully.
Which is, look, I don't want to be the guy who does this too premature. You know what I mean? I want to make sure that we're doing this when the time is right. And we don't have any urgency to pull the trigger too soon because the market can take it. The market is strong. There's no unemployment. There's no crisis. There's no reason to rush this. And I think he's right. And it's very, very similar to what he said in his press conference. So while he does confirm the fact it's not going to be a Goldilocks scenario in the first half of 2024, like a lot of people hope for, he did confirm in a way that rate cuts will come, although maybe slower and maybe not as many of them, but they'll come in the second half of 2024, which will push the market again in the right direction. Now let's talk about Jensen Huang. So Jensen Huang, one of the best CEOs in the market, hands down, talked about AI, talked about the future of AI, and he said this.
You have seen India, Japan, France, Canada now, Southeast Asia, Singapore, speak up about the importance of investing in sovereign AI capabilities. It is become abundantly clear to each one of the countries that their natural resource, which is the data of their country, should be refined and produce intelligence of their country for their country. And that capability of refining the data of their country and turn it into their artificial intelligence is now possible in a quite a democratized way. Almost every country should be able to do it for themselves. And what's needed, of course, is the technology and the know-how of standing up AI infrastructure, and that's where we could be quite helpful to various regions.
I'm going to be honest with you. When I hear Jensen Huang talk, I feel inspired. I mean, this guy is a revolutionary. He's a visionary, and he's one of the best CEOs in the market. And what he's saying is very simple. Look, resources have dominated global economies up until now. The new resource that is more valuable than gold, more valuable than anything, is data. I've been saying this for years. Data is the new resource. AI is the new shovels. Anybody who wants to get rich, any economy that wants to do anything in the next 50 years, any country that wants to be significant and influential has to invest in AI infrastructure, in data. And all of this is the new global economy that's being built right in front of our eyes. And AI is going to be everywhere. He's 100% correct. But what does it mean? It means that even the most dovish, the most beautiful estimates about where NVIDIA is going probably pale compared to what NVIDIA is going to be. Because you see, while we talk about this new economy, this new global shift, we do have to remember that the guys who sell the building blocks, the shovels, it's pretty much a quasi-monopoly. It's NVIDIA. So NVIDIA is going to do amazing things. It's going to reinvent itself 50 more times again, like Jensen Huang did before. And even if you think that NVIDIA is expensive, which it may very well be, it's still going to do some great things in the next 10 years. Now let's talk about Turkey and China. So Turkey has just reached a new pinnacle of inflation, 65% inflation. This is what happens when you refuse to raise rates at the right time. So shout out to Jerome Powell for not doing the same mistake as President Erdogan in Turkey, who literally decided not to raise rates because it was a bad idea theologically from a religious perspective. Of course, that's the way to run a central bank. And if you thought things are bad in Turkey, well, in China, they're getting worse. The CSI 300 is now at a 5-year low. The Chinese stocks are not doing well. The Chinese economy is not doing well. Evergrande just went to the toilet. More to come. The real estate market is going to go to the toilet as well. It's 35% of their entire GDP, which is by itself a lot of fake numbers there, a lot of demographic issues. China is in serious doo-doo right now. And this is just the first canaries in the coal mine. Now, as always, thank you for staying with me for these few minutes this morning. I hope you appreciate my time. I appreciate your time. If you lasted this long in the video, comment below. Let me know. I want to see who lasted all the way through. I'll see you in the next one.